All right, welcome back. Now we can go ahead and move on to our adjustment entries that are needed to be done at the end of the accounting period. So this is step 6, and step 7 is to complete the adjusted trial balance. So in this case, right, we have a bunch of adjustment entries we have to complete, right, such as periodic inventory, right? We talked about this in our very beginning of our accounting, where chapter 5.1, 5.2, right, we talked about how periodic means we need to adjust the inventory according to our inventory worksheet, but also by taking a physical count of inventory. So in this case, right, that is the first thing that says right here, that we need to adjust our periodic inventory. So in this case, convert the periodic inventory, because we have an ending inventory balance of a total, for ceramic coffee mugs, we have a total of 106 coffee cups. Okay. So our assumption is we must have sold X amount of coffee cups, but we don't know, right? We would have to figure that out in our inventory worksheet. So in this case, that's exactly what I'm going to do. I'm going to go straight to my inventory worksheet, and we're going to go to our ceramic coffee mug. So once again, we reach the end of the accounting period. So first things we need to do here is we need to figure out what our totals are, right? So that's what we got to do. We're going to figure out what our totals are. And I'm going to go ahead and highlight this so we know what we need to do. So how many coffee mugs did we purchase in grand total? We purchased our 440 cups. Okay. How much of the purchase expense did we do? Okay. Okay, in this case, right, equal sum. Okay, total purchase expense came up to $1092.20. Okay, how much was our total freight? It was $500. Oops. Okay, so in this case, equal sum. Right, we got a grand total freight of $500. And then last but not least, what is our grand total purchases? Okay, in this case, the total cost of our total purchases was $1592.20. Okay. We don't need to sum up our column here for the cost per item, because in this case, we will figure that number out. Okay, so this is what I needed grand total purchases for. Now, don't forget, we also need to calculate our discounts, returns, and allowances, because this is what we have incurred while making our purchases, right? We end up receiving broken coffee mugs, so we end up getting a refund or a vendor credit back to our account, which applied to our invoice. So in this case, right, that means out of our 440 items that we purchased, right, we had to return a few cups along the way. Okay, so we returned a total of 9, right? But we also received a discount for $1.87. So that's going to be included in our total purchase returns, allowance, and discount. So in this case, in grand total, we returned a total of $24.11. Okay, so that's where we need to plug it into our little section here, right? We need to figure out, well, in this case, what are we figuring out? We are using weighted average, meaning we don't care which batch came first and we don't care what batch came last, right? We just care about calculating our total goods available and our total cost, okay? So in this case, that's what we need to solve for, all right? And then we need to figure out what the average cost is, okay? And then we can go ahead and solve for our total cost of goods sold. All right, so in this case, quantity, how much was my original purchases? We purchased 440 at a grand total of $1,092.20. Okay. We also have returns and allowances, right? We returned 9 for a total of returns, allowance, and discounts, right, to be a total of 2411. Okay, so that means our subtotal here is going to be the 440 minus 9 gives us 431 with our 1092.20 minus our 2411, giving us a grand total of $1,068.09. Okay, so that means my freight, right, has no effect on my quantity, but I have to also add in the $500 worth of freight. So right now, my total net purchases is 431, right, at a grand total of $1,568.09. Okay. Now, of course, because we began our company, right, in since May 31st, right, we had to build our company. That means we didn't have any beginning inventory to begin with. So that means if I carry down my net purchases, right, that means my total goods available is going to be my total net purchases, right, because I have no beginning inventory. So that means this is what I need to calculate here is right now, I have a total of 431 items, okay, at a grand total cost of $1,568.09. I need to figure out what my average cost per item is, right? Because in this case, I'm using weighted average to figure out what my cost per item is. So in this case, I don't care what batch came first. All I care about is adding up our grand total inventory, quantity, and total cost, and finding and spreading the cost evenly amongst the total units. So in this case, I'm going to take my 1568.09 and I'm going to divide it by the 431 items that I have available. So that means each item, each cup I sell is going to cost me $3.63.826. Okay? All right? And let's see, my ending balance. What did it tell me? Someone went down to the basement and took an inventory count and told me I have only 106 coffee cups available. Okay? So in this case, 106 is what I have available. So that means my assumption is I must have sold a total of 325 cups. Okay? Now, it's up to you what you want to do. Do you want to solve for the cost of goods sold, or do you want to solve for the ending balance, okay? Now, I'll have both of them here so you can, get your numbers to equal out, right? But in this case, right, we know that the average cost per item is $3.6826. So that means I need to use my formula, my equal round here. Okay, so equal round, equal round by quantity times my cost per item, comma, 2 decimal places. So right now, this is what my ending balance should be, but this is also my total cost of goods sold. So I calculated 325 units at a cost per item of $3.63826, and we now get a total cost of goods sold to be $1182.43. And of course, another way that you could have solved for your ending balance is taking your total goods available and minusing out your cost of goods sold, and you should get $385.66, which is also what you could have solved if you just took your quantity of 106 and multiplied by the average cost per item. Okay, so in this case, everything pans out perfectly. So this is where, now that we're done with the inventory worksheet, we now need to do our conversion entry. Okay, so if you guys remember from way back when, from chapter 5, right, we are now doing our inventory conversion entry, okay? Because we are converting our purchase expenses and we're converting it into inventory. So first thing we need to recognize is going to be our inventory, right? What was the items that we have for the inventory, right? It's the ceramic coffee mugs. That's what the periodic purchases was for. It was for that inventory item. So in this case, we're going to double confirm what that inventory item is. So let's see, inventory. Okay, so inventory, our ceramic coffee mugs is account number 1250. Okay, so ceramic coffee mugs is the account. Okay. Ceramic coffee mugs. Now, again, you could use inventory, but that's the main account. I want to be very specific because my inventory contains my regular coffee, my Supreme coffee. And in this case, I have a sub-account called the ceramic coffee mugs, so that's exactly what I'm going to be placing them in, is directly into the ceramic coffee mugs, account number 15050. Okay, and what was my ending balance? It was for $385.66. Okay. Next thing we're going to do is we need to recognize our total cost of goods sold, because that's the purpose of our conversion, is that if we're going from our purchase expense into inventory, right, we're not transferring all of the units, right? Because in this case, I purchased a total of 440 units. But in this case, I only have 106 units. That means I must have sold some along the way. So that's the next thing I'm going to recognize is the cost of goods sold, right? Which in this case, let's take a look. What did I refer my cost of goods sold as? Okay, so in this case, I definitely referred it as cost of goods sold, right? Ceramic coffee mugs. So account number 5150. Okay. So I got the cost of goods sold, ceramic coffee mugs, which is account 5150, for a grand total cost of $11.82.43. Okay. Now I need to, right, refer to my purchase expense. Okay. So my purchase expense I have here is going to be whatever you originally purchased your total value for. So in this case, I have a purchase expense for $10.92.20. However, I also have a purchase returns and allowances, right? Which is a contra account. Now in this case, if I'm going to convert this, that means I need to also zero out my purchase returns and allowances, and also anything that goes against my purchase expense. So I have a purchase returns and allowances, right? However, I also have a purchase discount for that $187. So I need to go ahead and separate those two, and I'm going to zero those accounts out because that's exactly what we did, right? If we purchase a total of 440, that's not how many goods I have available, because I transferred 106 to my ending balance. I transferred 325 to my cost of goods sold. However, I also transferred 9 of those items into my purchase returns and allowances accounts. So in this case, that's what I need to recognize. A purchase returns and allowances. Okay. And I also have to keep it separate because when I originally journalized this, right, I may have returned 9 coffee mugs. However, I also received a 1% discount for one of those. So in this case, I also have to recognize the purchase discount. Okay. So let's go ahead and take a look at what those account numbers are. So here, Purchase returns is 61,500 and the purchase discounts is 61,550. Okay, so those are things I need to because they go against my purchase expense. So 61,500 and 61,550. And let's see. I know for a fact that my purchase discount was for 187. So let's go ahead and take a look at what my amount is for my purchase returns and allowances. Okay. So inventory worksheet, right? You could put this on the side here, or you could just simply calculate your discount to be for that 187, okay? So that's going to give you $22.24 worth of returns and allowances. So $22.24 for my returns and allowances. Okay, so let's see, the 87 cents, yes, 87 cents. Okay, so in this case, 22.24 is my total returns and allowances. Okay, and of course, because I'm converting my inventory, doing my conversion entry, right? I also need to convert my inventory, right? What was it? How did I originally recognize this purchase of periodic inventory? I did that by having a purchase expense account, okay, which also included my freight expense. Okay. Okay. So again, purchase expense was 61,000 and then my freight expense should be 6,300. Okay. So let's see. How much was my total purchases excluding my freight? So in this case, my total purchases was for $1092.20. Okay. And my freight expense was for $500. So that's exactly what I have to do. Okay. Okay. So let me go ahead and plug those numbers in. So I have 1092 1092.20 and I have my freight expense for $500. Okay. Of course, rule of thumb here is we need to double ensure that my total debits match my total credits. So here I'm doing my equal sum formula to ensure my total debits equal my credits. Okay. So I got 1592.20 on the left and I have 5092.20 on the left. So in this case, my total debits match my total credits. Okay? So 1592 and 20 cents on the left and the right. So in this case, we completed our conversion entry successfully. So what you can do here is we have all the information that we need, right? We know that we have, this is a conversion entry for periodic inventory. Okay. And we can also say that we have 106 mugs remaining, sold 325 mugs, right? And we already know that we returned the rest. Okay. So there you go, right? That is our conversion entry. So that means we are completely done with the inventory worksheet, right? We already did our regular coffee, we already did our Supreme coffee, and we just completed our ceramic coffee mug. So in this case, that is the last thing that we're going to do on this inventory worksheet, so you can close that worksheet. And now I need to actually update all of my ledger accounts. Okay, so starting with the ceramic coffee mugs, which is our assets. Okay. So this is going to be under our inventory. So let's see. Here's our regular coffee, Supreme Coffee. Here you go, ceramic coffee mug. So what you can do here is you can make a note that this is conversion entry. All right, and you can say you have 106 mugs remaining. Okay. And you got the general journal page. We're still, I think we are on page 22 here, the end of page 22. And we have a debit balance of $385.66. And that's going to be my current balance right there. I also need to, right, next thing I have on my list here is the cost of goods sold. So I need to update my cost of goods sold for the ceramic coffee mugs. So here's regular Supreme, and here's the ceramic coffee mugs, cost of goods sold. Today's the 30th. I can make a note that this is a conversion entry, and that I have sold 325 mugs. Okay. For this is general journal page 22, and we sold, right, it cost us $11.82.43. Okay, 11.82 and 11.82 and 43 cents. Okay. And then let's see. Now we need to go to our purchase expense accounts. Okay, so here we got to go to our operating expenses. So here we got our purchase returns and allowances, right? We're going to go ahead and make a note here. Conversion entry. Okay. This is general journal page 22, and we debited our account for $22.24. So therefore, that should bring your account balance down to zero, right? Because what we're doing is we're converting from our purchase expense to our inventory, right? That means we got to empty out that account. Right? And how do we empty our account? We zeroed it out. Okay, so in this case, there you go. I have a zero account balance in my purchase returns and allowance. I also need to zero out my purchase discounts, right? Conversion entry, right? General journal page 22 for that debit of $1.87. So that should give you zero. Okay. We also need to zero out my purchase expense account. That's the next account here. Conversion entry. General journal page 22. And this is a credit for the $10.92 and 20 cents. So that, right, of course, this will give you an account balance of zero. Okay. And then last but not least, we also have to credit my freight expense. Okay, so my freight expense right here, freight expense, right? 0.30, conversion entry. General journal page 22, which will credit my account for $500. So that should give you an account balance of zero. Okay. And this is it, right? This doesn't have to do with anything with the subsidiary ledger. So this is an internal transaction, right? We're going from our inventory and we're basically moving from one account to another. So that is it. No need for the subsidiary ledger for this. And we are done with our conversion entry here. Okay. Again, there's no space for, there's not enough space to put a transaction there, so there's no need for a line. So now that we're done with that transaction, we can go ahead and move on to the next scenario. Okay. Now it tells us that we need to adjust our materials because in this case, right, we end up using a lot of the coffee cups, right? We use the medium coffee cups because we sold it to our customers. We also used our sugar and creamer, right? Okay, now in this case, I've already given this to you, the units sold as well as the cost per item, right? You can solve this by going into your general ledger and solving for by doing your equal sum formula to because we kept a track record of how many cups we sold for each coffee cup, right? You're able to solve for how much your total coffee cups that you sold. But in this case right here, I've already done the work for you just because our job isn't to count how many cups that we sold. Our job is to see what we have here and adjust our inventory accordingly. Or in this case, sorry, adjust our supplies accordingly. So in this case, for our grand total for June, we sold a total of 5,297 medium cups. Okay? And we sold a total of 4,331 large cups. Okay? And here, this cost per item is actually pre-calculated, right? We figured out how much each cup cost us. So when we purchased those coffee cups, right, they were 5 cents each for the medium, and they were 7.5 cents each for the large, right? But we also have to distribute the tax on that. So in this case, it's already pre-calculated for you. All you have to do is figure out what those numbers are, and that's what we're gonna do. We're gonna do our calculations right into our Excel sheet here so we can find out what those numbers are, okay? In this case, what are we doing here? We are calculating the cost of the materials, right? So we've seen the cost of materials before in our cost of goods sold accounts, right? If we go to our ledger accounts, right, under the cost of goods sold, we do have a section for the cost of materials. So that means we're going to be calculating the cost of materials for the medium cups, the cost of materials for the large cups, cost of materials for sugar, and cost of the materials for the creamer. And where do we take these amounts out directly from? Straightforward, right? To the respective accounts under the business supply. So when we're adjusting our cost of materials, right, we're representing how much have we used or representing how many things that we have sold. So in this case, for the coffee cups, we sold X amount of cups. And for the sugar and creamer, how much did we use? Okay, so in this case, right, I already given you all the information here. All you have to do is just solve for the total cost of those items. So in this case, let's go ahead and go to my journal here and take a look. What is those cost of materials accounts mean? Okay, so in this case, scroll up right here, cost of materials. Cost of materials for the medium coffee is $51,200. Cost of the large is $51,250. And then cost of sugar is $51,300. And then cost of the creamer is $51,350. And then because they're all expenses, right, we're representing that we used these items. So it's going to be an expense, right? So we're going to be debiting these accounts. Okay. So there we are. General journal. Today is the 30th, right? And we have cost of materials for the medium coffee cups. Okay. We have the cost of materials for the large coffee cups. And we also have the cost of materials for the sugar and the cost of materials for the creamer. I'm just going to go ahead and put them all together because they're all going to be essentially, right, this section is just calculating the cost of the materials, right? Instead of doing one line at a time, right? Cost of materials for the medium coffee cups and then taking them directly out from the item here. We're going to save ourselves time and just put them all together into one journal entry so we can reflect what your actual total cost of materials are, right? And we talked about this, right? Where does it come out from? It's going to come directly out from your actual business supplies account. So you're going to have the medium coffee cups and you're going to have the large coffee cups. And you're going to have the sugar account and the creamer account, right? Those are all going to be taken out from those accounts. Okay? And so therefore, let's go ahead and locate what those business supplies account numbers are. So in this case, medium coffee cups is 11,760. Large is 11,765, sugar is 11,770, and the creamer is 11,775. Okay, so 11,760, 11,765, 11,770, and 11,775. Right? Oh, and then your cost of materials was the 51. I already forgot. Okay, so let's go back down and look at them. So cost of materials for that is 51,200, 51. Okay, so 51,200. Okay, so 51,200, 51,250, 51,300, and 51,350. Okay, so let's go ahead and figure out what those costs of materials are. So if I sold, so this is a calculation here. If I sold 5,297 medium cups, right, that cost me 0.0542. So 5.42 cents per, right, comma 2. I get a grand total of $287.10 worth of medium coffee cups. And that's going to take that directly off of my medium cups. Okay? We also need to solve for the total for my large cups. If I sold 4,331 cups at a cost per item of 0.0812, so 8.12 cents here, comma 2. That's going to give me a total of $351.68 worth of large cups. Okay, that we need to adjust. Let's see. My sugar, right? We used 120 pounds. So 120 pounds, and it cost us 36 cents each pound, right? And we used 120 pounds. Okay. So let's see. Equal round 120 multiplied by 0.36, comma 2. That's going to give us $43.20 worth of sugar that we used. And then for the creamer, right, equal round, right, we used 22 cases, and it's going to cost me $16.33 per case, right, comma 2. So that's going to give me a total of $359.26 that we used. Okay. And we have everything that we need, right? We have, this is going to be considered adjustment entry for business supplies sold, used or sold, whatever you want to use, right there, right. I'm gonna say used. Okay. So now let's go ahead. Now we finished our totals right here, right? Now we need to update our ledger to adjust our numbers here. So cost of materials, right? That's where we left off. So cost of materials, starting with our first one, the medium cups. How many cups did we sold? Well, in this case, right, we're going to do adjustment, and we used up, let's see, how many did we use? We used 5,297 cups. Okay. Right, and that's going to be, we're on the 23rd. We started on the new worksheet here, and that costs us a total of $287.10. $287.10. Okay. All right, so let's go ahead and adjust our large cups here. So this is going to be an adjustment entry, right? We sold, sold 4,331 cups of the large cups. General journal, page 22. Wrong one. Journal, page 23. Which gave us a grand total of $351.68. $351.68. 35168. Okay. And we also need to adjust our sugar, right? So adjust used 120 pounds, which gave us a total of $43.20. And last but not least, cost of materials for the creamer. Right, how many cases did we use? We used 22 cases. So in this case, adjustment used 22 cases, which gave us a grand total of $359.26. 359.26. Okay, there you go. So then now let's go ahead and update our business supplies. Okay, so then we know when the next accounting period starts, we know how many cups we're going to start the accounting period with, or in this case, the month of July, right? How many cups do we have left remaining? So starting with the first one here, our medium coffee cups. So let's see. It is the 30th, right? I'm going to put adjustment entry. Sold 5,297 cups. Okay. So that means how much do we have remaining? In this case, right, let's see. We bought 1,000 plus 2,000 plus 2,000 plus 2,000, right? That's a total of 7,000 cups that we purchased, right? So in this case, right, let's go ahead and do our math real quick. How do we figure out how many cups we actually have left over, right? So in this case, we got to do our calculations here. We need to figure out what that total amount is. So let's see. We started out with 7,000 cups and we sold 5,297. So we should have a remainder of 1,703 cups. Okay? So that means 1,703 cups remaining. Okay? So that gives us an idea of whether we need to make a purchase of some more cups, or that should be enough for the very first of the month of the next month, okay, of July. We're on the 23rd here, and we're going to credit the account for $287.10. $287.10. Okay, and that's going to bring your account balance down to $91.77, right? So that represents that means we started out with 7,000 cups, right, at a grand total of $378.87. But because we sold our coffee cups along the way, we now have a total of 1,703 cups left at a total cost of $91.77. So we call that an adjustment entry because realistically, we don't have 7,000 cups anymore, right? We sold them when we sold our coffee cups, right? So let's go ahead and adjust the large cups. So in this case, adjustment entry, right? We sold 4,331 cups, okay? That means we should have, let's see, how many we purchased? We purchased the same amount, right? 7,000 cups, and we sold 4,331. We should have a remainder of 2,669 cups remaining. Okay, so again, General Journal, page 23. And we're going to decrease our account by $351.68. $351.38. $351.68, excuse me. $351.68. Okay. And once again, that's going to decrease our account down to $216.65, excuse me. $216.65. Okay. We're going to adjust our sugar here. So again, adjustment, okay, used 120 pounds of sugar. So let's see. We purchased 60, 60, and 60, right? So 60 times 3 gives you 180, right? Minus 120 should give you a total of 60 remaining. So 60 pounds remaining. Okay. General Journal, page 23. So therefore, we used up $43.20. So that should adjust your inventory to give us an account balance of $21.60 left. Okay. And then for our coffee creamer, right, adjustment here, we used 22 cases, okay? So therefore, let me see. We purchased originally 3, then we got 15, then we got 15, so that's a total of 33. So that means 33 minus 22 will give you 11 cases left. Okay. General Journal 23, and that's going to decrease our account by $359.26. So $359.26. So that will decrease your account balance down to $179.63. Okay? So there you go. We adjusted our business supplies accordingly. So we went from calculating a cost of materials and taking it out directly from our business supplies. Okay? Which is once again an internal transaction. Okay? Next we have to do is going to be calculating our petty cash, right? We need to reimburse the money that we spent from our petty cash. So here is the petty cash ledger right here, right? Everybody took money from the petty cash drawer to buy the party supplies for the business party, right? For the grand opening party, right? The owner took out money to buy 10 pizzas and 10 sodas, tax and total, right? And we also got $25 for delivery. So in this case, a grand total of $187.16, right? That was taken out, right? Irene also took out some money to buy a cake for $23.80. And again, Albert also took money to buy decorations, so streamers, balloons, plates, and supplies and napkins and all the utensils and everything to get a grand total of $71.82. Okay, so now we need to figure out all of these expenses, right? What kind of expense would you categorize all of these transactions for in order to replenish our petty cash drawer, right? Because how do we replenish our petty cash, right? Since we never took out cash to begin with from the petty cash directly, right? And all of these expenses that were made, right, they happened during the accounting period, but we don't recognize them until when we replenish the petty cash drawer. So in this case, let's take a look at a list of expenses. What kind of expenses would these items fall under? Okay, would they fall under an advertising expense? No, it's a grand opening party. That has nothing to do with selling your coffee. It doesn't have to do with bank fees, okay? A business expense, maybe, right? It might be because, again, you're buying stuff for the business, again, to celebrate a grand opening party. So maybe that will be there. Freight expense, no, it's not extra things that you had to pay for shipping. It's definitely not insurance, not interest, definitely not labor, right? Has nothing to do with a license. You didn't sell your fixed assets. You did not take a loss on it. It's not considered office supplies, right? You didn't buy paper, pens, or anything like that. It's not an office supply, okay? Because you bought pizza, you bought food, you bought a cake, right? That has nothing to do with the office supplies. It didn't have to do with payroll, right? These expenses didn't affect your payroll, paying your employees. It wasn't a purchase expense, right? Because you didn't buy inventory. It wasn't for traveling. It didn't have to do with the utilities. Had nothing to do with bad debt, depreciation, or amortization. So in this case, business expense is going to be your number one expense account to represent all of these charges that you made to the petty cash drawer. Okay? So in this case, that's exactly what I'm going to do. This is a business expense, right? Which is account 6200. Okay, now how much did I actually rack up? In this case, it cost me $187.16 for the pizza. Okay, so it cost me $187.16 for the pizza. It also cost me $23.80 for the cake. It also cost me $71.82 for the party decorations and supplies. So in this case, I racked up a grand total of $282.78 that of business expenses, right? And how do I replenish the petty cash drawer, right? If these are the total amounts of receipts, right? How do I put money back into the petty cash drawer? I simply have to cut a check out, right? And basically pay for those items that there were receipts for in order to put the money back into the account. So in this case, it's going to come out of my checking account for that $282.78. Okay? And how do we replenish the petty cash drawer, right? We write a check out. Who are we going to write a check out to? We're going to write a check out to whoever is going to be in charge of the petty cash drawer, which is going to be Miss Irene Jameson. So again, let's double check that. Was it $282.78? Okay. $282.78. So this is going to go to Irene Jameson because she is in charge of the petty cash drawer. Replenish petty cash. Okay. So there you go. You wrote her a check, so now she is responsible to go to the bank, cash out that check, get the exact change, and put it back into the petty cash drawer. So in this case, check number 1534 is that one, and you're going to make a note here that you are replenishing petty cash drawer. And how are you going to replenish it? With a check number 1534. Do you need to write down Irene's name? No, because whoever's in charge of the petty cash drawer, you're just going to be, right? The check already has the person's name on it. So in this case, all you have to do is refer that this check is actually for replenishing the petty cash. Okay. So let's go ahead and do that. Okay, so there you go. We are going to update our ledger, okay? And we're going to start with our business expenses here, right? Because in this case, $282 is taken out, but the value of the petty cash drawer should remain at $500, right? In this case, that drawer had $282 worth of receipts plus whatever amount of cash is in there. So now we're replacing those receipts with cash. Okay, so here we are under business expense. Okay, you're going to say right here, replenish petty cash. Okay, for grand opening party supplies. Right, and you could say pizza, cake, and decorations. Okay. General journal, we're still on page 20. I think we started a new page, right? Let's see. No, not yet. We're still on page 23 here. Okay. And it was for a total of $282.78. So $282.78. So in this case, grand total business supplies is going to be $1,282.78. Okay. And of course, I wrote a check, so that's going to 100% affect my checking account. So here we are in my checking account. Okay. Right. This one, we wrote check number 1534. And that's going to decrease my account by $282.78, which will drop your checking account balance, okay, down to $12.32.76. Okay. Now we must fulfill all of the depreciation expenses. So we're going to be dealing with all of the accumulated depreciation. Now, in this case, right, we only have one depreciation expense account. So what I'm going to have you do is we're going to finally open up our depreciation expense tables, all right, to be able to calculate our depreciation, right? And we're going to calculate them all grand total together in our into one account, which is the depreciation expense. So we're going to actually list out all the accumulated depreciations for this transaction, okay? Because we all know it's all going to go to depreciation expense account, okay? Which in your chart of accounts is going to be account number 66,000, okay? So depreciation expense, 66,000. Okay, what is our grand total that we are going to be calculating here? So we're going to list out each and every single account here, but we're also going to utilize our depreciation tables, okay? Because each one is going to have a specific one. All right, so let's take a look here. It says to calculate 1 month's worth of depreciation for the truck, okay? And it has a mileage total of 150,000 miles, okay, before it needs maintenance, okay? No salvage value, and of course, it has a useful life of 7 years, okay? And of course, for this month, we drove a grand total of 1,200 miles, okay? So in this case, right, this truck is based on a total of mileage. So if that's the case, right, then that means which depreciation method are we using? If it's going to be based on a total of miles that you drive, then that must be activity-based or units of production, right? There's a cap limit of how many items you can produce. In this case, this is a truck. It can only drive up to a total of 150,000 miles before it needs to go towards maintenance, okay? So that means that's what we're going to do. We're going to go ahead and visit our depreciation tables, okay? So each and every single one is going to have its own separate depreciation here. So let's go ahead and locate that truck, okay? So here we got tables and chairs. Let's see. Here is our truck, okay? So we know for a fact that what is the depreciation method? I'm going to use UOP for short for units of production because we already figured that out. What is my total asset cost? How do I know how much my vehicle for my truck is actually worth? Okay? We can find that value out in our general ledger. Okay? So our general ledger, right, every time we purchase our assets, we know exactly how much they're worth, right? What our total cost is. So in this case, let's see. My truck right now is currently at a total of $32,208.90. Okay? So $32,208.90. Okay? $32,208.90. $32,208.90. Okay? And of course, its salvage value. We already read that there isn't any salvage value. Okay, how many miles can it drive? It says here that it could drive up to 150,000 miles. Okay, and it says the date that we place into service. When does depreciation usually occur when we buy our truck? Okay, usually, right, the rule of thumb here is that once you drive it off the dealership's parking lot, it starts to depreciate automatically. So in this case, when did we buy our truck from the dealership? Okay, so in this case, it says that we made the purchase of the truck on June 7th. So that means, or that should be June 8th, actually. June 8th is when we actually purchased the truck. Okay. So in this case, we purchased it as of June 7. It says right here, I think it's supposed to be June 8th. We bought it on the second week of June. So in this case, June 8th is when we actually purchased it. So that means when we placed it into service, we placed it into June 8th. So what does that tell me? Does that mean I need to depreciate for the month of June, or do I start depreciating for the month of July? In this case, the rule of thumb here says if it's anywhere between the 1st and the to the 15, so the first 15 days. If you have started to depreciate as of between the first 15 days, that means you have depreciated for at least more than 50% of the month. So that means, yes, we do need to depreciate for the month of June. Okay? So that means, right, we are going to be calculating for June's depreciation for the truck. Okay? So in this case, right, it tells us that for the first month, we drove a total of 1,200 miles. Okay? So in this case, units of production, how do we calculate the depreciation basis? Okay? In this case, the depreciation basis is going to be the asset cost minus salvage value, so minus 0, which is going to give you a total of $32,208.90. Okay? That's your depreciation basis. Okay? How do I figure out what the depreciation rate is? So in this case, we have to use a per unit rate. So that's going to be your depreciation basis divided by the total units that it can produce. So in this case, what is the total mileage that this truck can drive, right? It can drive 150,000 miles. So that means how much is it going to cost me per mile that I drive it? In this case, it says 21 cents, but let's go ahead and expand that because it could be more or less. So in this case, if I expand it, it's going to be 21,472.6. So that means I need to calculate how much it's going to cost me per item. So in this case, if I drove a total of 1,200 miles, right, at a cost of 21,472.6, right, how much is it going to cost me to depreciate, right? How much did I use up so far? In this case, right, when I hit that total, it's going to give me $257.67. Okay? Now, for units of production, is it time sensitive? Okay? In this case, no, because it's not basing it on time or its life. It's basing it off of how many units it can produce. So in this case, there's a capacity of 150,000 miles. I've only driven 1,200. And if the cost per mile is going to be 21 cents, right? Then the total cost of depreciation expense that I'm going to be writing off for this month is going to be for $257.67. Okay? So in this case, because I'm only going to be depreciating for the month, for the first month, you can solve for the rest, right? What is the actual book value going to be? This isn't going to be as relevant because you're not going to be calculating the next month of depreciation, right? But if you want to do it for practice purposes only, go ahead and practice what the book value is for this. So in this case, it's like your asset cost minus your accumulated depreciation. So in this case, the number that you're trying to main focus here is going to be your depreciation expense right here for the $257.67 is your depreciation expense. Okay? Now, it is up to you if you want to go back and forth into your journal and record that amount. That is up to you. If you choose not to, then you can wait till you do all the calculations first and then go ahead and do your total amounts later on. So in this case, that's exactly what I'm going to do. I'm going to do all my calculations first, and then I will solve for plugging in all my numbers into my journal later. So in that case, here's my depreciation expense for the truck is for $257.67. Okay. So let's see what the next one says. The next one says here that you are to calculate for 1 month's depreciation for both coffee brewers. Okay? But here's what happened here. The first coffee brewer, right, has a life remaining of 3 years, no salvage value, okay? And the second coffee brewer has a estimated useful life of 5 years, no salvage value, okay? We're going to be using straight line to calculate the depreciation for the coffee brewers, okay? Because if you remember, right, we bought out a previously established coffee business that had a coffee brewer that still works for that was the first coffee brewer, right? Because it was already used, it now only has an estimated useful life of 3 years remaining, right? It's been appraised. And of course, we end up buying a brand new coffee brewer, our second one, through Haley Bros. So that one, since it's brand new, it has an estimated useful life of 5 years. Okay, so we're gonna go ahead and locate that in our depreciation table. So here for the coffee brewer number 1, we were told to use straight line, so SL, okay, for short, so you know. The first coffee brewer has an estimated useful life of 3 years, okay? No salvage value, we were given that, okay? And for the second coffee brewer, right, we're still using straight line, okay? And we are going to be, has 5 years remaining with no salvage value. So now we need to figure out what those costs are. So let's go ahead and go to our ledger and figure out what those costs are. Okay, so the very first one for the coffee brewer, we know that when we purchased our first one, it was a total of $1,900. And when did we buy it? We bought it on the 31st of May. So in this case, right, we established it as of June 4th. In this case, you recognized it as of May 31st. Now in this case, right, when you buy a coffee brewer, your first initial thought is you need to test to make sure it still works, okay? Because in this case, we bought a or in this case, a used coffee brewer, right? We need to ensure that this coffee brewer still works, right? Because we don't know how long ago this coffee business went out of business, right? So we don't know, this coffee machine could still have been there for a couple years and it hasn't been used. So in this case, right, we need to ensure that it works. So you would definitely plug it into the wall and make sure it works the day that you purchased it. So same thing for when you purchase the second coffee brewer, right? You have to test to make sure it works. So in this case, the day that you purchased it is going to be the day that you placed into service. So in this case, the first one was the 31st of May, and the second one, right, we established it on June 10, okay? Now in this case, right, we need to calculate how much this coffee brewer cost me, right? Because we end up taking a discount on it. There's 2 ways you could do this, right? You could take your grand total amount of the $4505.29 and just subtract your $1,900, which is your first coffee brewer, to get a grand total of the $2,605.29, right? That's the easiest way to do it because you only have 2 coffee brewers, right? You take your grand total amount and subtract one of the coffee brewers, you'll get the total amount of the second one. Or you can just simply you take your total of the 2,627, right, and subtract that discount for 22 to get the same answer. So in this case, my first coffee brewer is $1,900. My second coffee brewer is $2,605.29. So asset cost for the first coffee brewer is $1,900. And when did I place it into service? Well, in this case, I placed it into service. I placed it into service on May 31st. So that means for sure we are going to depreciate it for the month of June. Okay. And my second coffee brewer, right, the the asset cost was $2,605.29. All right, let's double confirm that. 2,605.29. Okay. 2,605.29. Okay. And of course, we purchased it and received it on June 10. So for sure, that's definitely more than 50% of the 50% of the month. So let's go ahead and calculate one at a time, starting with this one. Since we know for sure we are going to be depreciating it for the month of June, right? Let's calculate what the depreciation basis is, which is your asset cost of $1,900 minus the salvage value of $0, which will give you a total of $1,900. Okay? So in this case, depreciation rate is going to be 1 over its estimated useful life of 3, which gives you 30.33, or 1/3 of the, that's your rate, right? 1/3. So now I need to solve for my depreciation expense. So I'm going to do, right, the formula is your depreciation basis times your rate. Okay, and I'm going to use equal round to give me a solid number, or a rounded number. In this case, it's going to cost me $633.33 worth of depreciation expense. Now, that is a lot if I'm calculating for a whole month, right? In this case, right, if I'm calculating 1/3 of $1,900, right, what am I calculating here? I'm calculating for a whole year, right? If you take 633 and multiply it by 3 years, that's going to give you your $1,900. So in this case, I am not depreciating for $633.33 because that's for 12 months. I need to divide this whole thing by 12 because I'm only depreciating for 1 month, which is the month of June. So in this case, I'm going to go into the formula and I'm going to divide this whole entire thing by 12 to get me a total of $52.78. So this one is definitely more correct because in this case, that should reflect how much it's going to cost you for that month. Okay, and again, you can continue to figure the book value if you want to. So that's for the first coffee brewer. So the second coffee brewer, right, we are depreciating it for the month of June. Okay, depreciation basis is going to again be your asset cost minus your salvage value of 0. So again, you got your 2605.29. Your depreciation basis is going to be 1 over the estimated useful years of 5. Okay, which is 20%. So in this case, your depreciation expense is going to be your depreciation basis times rate. Once again, divide by 12. And that's going to give you a total of $43.42 for this second coffee brewer. Okay. So in this case, right, let's go ahead and calculate the grand total for the coffee brewers since I don't have a separate account for the first and the second coffee brewer. So I'm just going to add these two numbers together. So we got $52.78 plus this $43.42. to give us a grand total of $96.20 worth of depreciation expense for the coffee brewers. Okay. All right, let's see what's next. Okay. We are also going to calculate 1 month's depreciation for the coffee grinder, 5 years straight line, and of course, no residual value. Residual value means same thing as salvage value, so it means there's nothing left remaining at the end of its life. So in this case, it has an estimated useful life of 5 years, and we're going to be using straight line for the coffee grinder. Okay? So, all right, going back to my depreciation expense tables, we're going to go to coffee grinder, right? We know for sure we're going to be using straight line. Okay? And we have the asset cost. We need to figure that out. We know for a fact there's no salvage value, and it has an estimated useful life of 5. So let's go ahead and determine what my asset cost is for that coffee grinder. Okay? So in this case, my total coffee grinder, including the discount here, is right now at $41.45 and 57 cents, right? $41.45 and 57 cents. $41.45 and 57 cents. Okay, so that is your asset cost right now, right? Including the discount. Okay? Because that's what it says in your ledger. Okay? So $41.45 and 57 cents. Okay. So in this case, when did I purchase this? In this case, we purchased it on the 10th of June, right? Just like we did for the coffee brewer, right? However, we had to put some more fixtures, right? Because it isn't when you buy it. It's based on when you place it for service, when it's ready to be able to operate. We had to do extra electrical wiring, and we had to build a foundation on the actual coffee grinder itself. So in this case, when was it ready? It was ready as of June 15th. So the rule is if it falls between the 1st and the 15th, right? The first 15 days, you are going to depreciate it for the month of June. In this case, it just ended on the last day of that, which is the 15th. So in this case, we are going to be depreciating for the month of June for the coffee grinder. Okay? Because we placed it into service as of June 15th. Okay? So that means, right, my depreciation basis is going to be your asset cost minus salvage value. So again, 41.45.57. The depreciation rate is going to be 1 over the estimated useful life of 5 years, gives you 20%. And we're going to calculate this, which is basis times rate divided by 12, okay, comma 2. So that's going to be $69.09 for the accumulated, for the depreciation expense for the month of June. Okay, and you can calculate this if you want to, okay, for the book value. All right, so let's see what is next. We also need to calculate 1 month's depreciation for the refrigerator, okay? It's got an estimated useful life of 10 years, okay? And you're going to use straight line with a no salvage or no residual value. So in this case, right, we got a refrigerator that can last up to 10 years, okay? So here we go, fridge, right? We're going to be using straight line, right? We have estimated useful life of 10 years. We have salvage value to be 0. And let's see when we made a purchase of it and how much it cost. So in this case, scroll down. Here's the refrigerator. We purchased it as of June 14. Okay, that means we got to plug it in, right? And it was a total of $34.95.34. So $34.95 and 34 cents. Okay, so that's what it cost me. $34.95 and 34 cents. And we placed it in service on June 14. So that means, yes, we also need to depreciate it for the month of June. Okay, So depreciation basis for straight line is going to be asset cost minus salvage value. So that's going to be your 34.9534. Depreciation basis is going to be the 1 over the useful life of 10 years, which will give you 10%. So your depreciation expense, okay, is going to be your basis times rate divided by 12, okay? And that means you're going to be calculating $29.13 worth of depreciation expense for the refrigerator for the month of June. Okay. $29.13. Right? So let's see what is next. Okay. Next says here that you are also going to calculate 1 month's depreciation for the computer, printer, and the cash register. They all have 5 years of life. And this time you're going to be using double declining, no residual value. So in this case, the computer, printer, and cash register we're going to be using the double declining method. Okay, no residual value, and it's 5 years. Okay. So starting with the first one, we're going to go with our computer. Okay, let's see. So we know for a fact we're going to be using double declining. Okay, we know that the computer has an estimated useful life of 5 years, no residual value. So let's see when we actually purchased our computer. Okay. We purchased our computer. Let's see. Right. Here you go. Office equipment, our computer. We purchased it on the 5th of June. Okay. For $1834.84. $1834.84. $1834.84. Okay. And again, we bought it on June 5th. Okay. So therefore, yes, of course, when you plug in the computer, right, what do you have to do? You have to set up its operating system, right? You have to make sure you set up all the installations for the programs that you need and so on and so forth. Okay. So again, depreciation basis. Depreciation basis is going to be the beginning of the year's book value. Okay, so that means because it's the first time you're depreciating it, it's going to be the asset cost. No salvage minus salvage value, because that's not what this formula does, right? This formula is going to be taking the book value. Okay. The depreciation basis is going, or depreciation rate is going to be 1 over its estimated useful life times 2, because you're depreciating it twice as much. Okay, so that's going to give you 40%. So once again, this one's going to be your formula to figure out what your depreciation expense is going to be basis times rate, right? But we have to divide this by 12, right? We established that already, because we're not solving for 1 whole year. We're solving for a month. So in this case, we're going to divide this by 12, and that's going to give me a total of $61.16 worth of depreciation expense for the computer. Okay. So then let's go ahead and go to our printer, right? We already know the printer, once again, is also going to be double declining. We know it to have an estimated useful life of 5 years. We have 0 for the salvage value. Okay. And in this case, right, we bought the printer the same time as we bought our computer, so June 5th, and the printer cost me $378.87. $378.87. Okay. And again, we also purchased it on June 5th. So yes, we have to make sure that the printer is on and test print out our invoices and so on and so forth, right? Okay. So depreciation basis for double declining, once again, is the beginning of the year's book value, which in this case, if you're using it for the very first time or calculating depreciation, it's going to be the asset cost. Okay. The rate is going to be 1 over the estimated useful life times 2 because we're double depreciating it. So in this case, how much is this? So basis times rate divided by 12. We're going to depreciate $12.63 worth of the printer for the month of June. Okay. And let's figure out what the register is, right? So we know, same thing. It's double declining, right? It has an estimated useful life of 5 years with no salvage value. And let's see, when did we actually buy the cash register? Okay. So in this case, we purchased the cash register for $649.49. Okay, at a on June 6th, right? And of course, when you have a cash register, well, you gotta plug it into the wall, test print out the receipts, and so on and so forth. So in this case, for $649.49 on June 6th. So $649.49. Okay. On June 6th. So therefore, yes, we are going to be depreciating it for the month of June, right? Depreciation basis is going to be your asset cost for the first one, not the beginning of the year book value, but it is the beginning of the year book value for the next month, right? 1 divided by the estimated useful life times 2, which, right, is 40%. So in this case, right, depreciation expense is going to be basis times rate. Okay, so, I forgot to divide by 12. So that's not correct. Basis times rate divided by 12. Okay, so $21.65 is what you're going to be depreciating for the month of June. Okay. All right, let's see what is next. Okay, so let's see. We already got the depreciation for the computer, the printer, and the cash register. Okay, so now we need to depreciate 1 month of the furniture. So the furniture has a lifespan of 7 years, and we want to do straight line with no residual value. Okay, so that means we got to calculate all of the furniture. So the furniture will include all of the following for the tables and chairs, the counter, the desk, and the display shelves. Okay, they all have a 7 years lifespan with straight line we're going to use with no residual value. Okay, so let's see. Let's gotta find the tab here, right here. Here's the first one, tables and chairs. Okay, we know this to be straight line. Okay. Okay, we have a 7-year lifespan on it. Okay, 0 residual value. So when did we actually purchase the furniture? Okay, so in this case, let's see. We purchased the tables and chairs. Okay, so we purchased the tables and chairs as of June 8th for $6,605.08. Okay, so June 8th is when we received the tables and chairs. Okay, for $6,605. $6,605.08. Okay. So we're using straight line. So in this case, we are going to be depreciating for the month of June, right? This case is going to be your asset cost minus your salvage value for the basis. Your rate is going to be 1 divided by the estimated useful life of 7. So in this case, 0.1428. Okay, so in this case, I'm going to solve for basis times rate, again, divide by 12. So for the month of June, you're going to depreciate $78.63. Let me redo that again. Equal round basis times rate, okay, divided by 12. It's going to give you $78.63 of depreciation for the month of June. Okay. Next one is going to be the counter, right? Because we know for sure we're using straight line. Okay. We know it's going to be 7 years estimated useful life with 0 salvage value. Okay. And that's going to be, okay, let's figure out what the asset cost is. Okay, for the counter is going to be, okay, for $1193.22, and we purchased it on June 7. So $1193.22. Okay, $1193.22 for the counter. Okay, June 7. Okay. Okay, basis is going to be your asset cost minus salvage value. Okay, and the rate is going to be 1 over the estimated useful life of 7. Okay, we're going to now calculate my depreciation expense. Okay, which is your basis times rate divided by 12 to give you $14.21 to depreciate for the month of June. Okay. Next one we're going to be moving on to is our desk set. So again, we're going to depreciate using straight line, okay, with 7 years estimated useful life with 0 salvage value. Let's see when we bought the desk set, okay, and how much it cost us. So we purchased the desk set on June 7 for a total of $658.37. So $658.37. Okay, $658.37. And we got it on June 7. So for sure, we are going to be depreciating for the month of June. Okay. Depreciation basis, once again, is asset cost minus salvage value. Okay. Your rate is 1 over the estimated useful life of 7. Okay. Depreciation expense is going to be basis times rate divided by 12. Okay. So I'm going to be depreciating $7.84 for the desk set for the month of June. Okay. And the last piece of furniture we have here is going to be your shelves, your display shelves. So in this case, what method am I using? I am using straight line. Okay. We got 7 years on this with a depreciation of 0. Okay, so let's see when we purchased the display shelves and how much it cost. So in this case, right, we purchased the display shelves with the counter. Okay, so that means on June 7th when we got it for $577.08. So $577.08 is my depreciation here. Okay, and we purchased it on June 7th. Okay, so again, we are going to be depreciating over the month of June. Depreciation basis, once again, is your asset cost minus salvage value. Your depreciation rate is going to be 1 over the estimated useful life of 7. So we're going to calculate the depreciation expense, okay, to be your rate, your basis times rate divided by 12. So your basis times rate divided by 12. Okay, so a total of $6.87 for the depreciation expense for the month of June. Okay, so that was the furniture. Okay, and it says here you're going to also calculate 1 month of amortization for goodwill. So in this case, goodwill is an amortization, right, for 15 years, right? We already know for amortization is for intangible assets, right? We purchase the business and we gain some goodwill. So we need to also adjust goodwill because it amortizes over time, right? You're not going to continue to keep having the value of $2,100 all the time. It loses its value over time, right? So in this case, right, we need to adjust it. Now, in this case, right, amortization actually ends up being the same thing as depreciation. The only difference is the terminology, right? Depreciation is for fixed tangible assets, while amortization, again, is in more or less depreciating intangible assets. So in this case, under your depreciation tables, you do have a section for amortization. Okay, so in this case, amortization method, right? Same thing. You're amortizing it for that method. Okay, how much is estimated useful life? We said 15 years, and again, we know for a fact that intangible assets, it should not have any value at the end of its life because, again, think about license and patents, right? You have to renew those license and patents, so you're adding value to it, and it should have no value at the end of its life, okay? So let's go ahead and determine how much it is and when we purchased it, okay? So see goodwill, okay? So goodwill, here you go. Well, that's deposits, goodwill. We purchased goodwill when we purchased the business on, okay, so it says right here, it doesn't tell us when, but that if you remember, right, we purchased it when we bought the company on May 31st, okay? So again, it says right here, we purchased the business name, okay? So again, May 31st, or if you want to recognize it as June 4th, at the end of the day, you're still going to amortize it for that month of June, and the total cost of it was $2,100, okay? So again, $2,100. And when did you place it into service? Again, you bought it on the 31st of May. So again, you are going to amortize it for the month of June. Okay. In this case, right, there is no salvage value, right? And when we do amortization, it functions exactly like how we depreciate straight line, using straight line, right? Where it's going to be asset cost minus salvage value. In this case, amortization doesn't have a salvage value. So in this case, the formula for the depreciation basis is just going to be the asset cost of $2,100. The amortization rate is still going to be the same thing, right? 1 over its estimated useful life of 15. So that will give you 0.066666 ongoing, right? And because it acts just like straight line, right? We only want to depreciate it for the month of June. So in this case, it's still going to be the same formula as straight line, basis times rate, but we're going to divide it by 12, okay? And that's going to give us a grand total to amortize for $11.67, okay? So there you go. All right, so now we completed all of our tables here, okay? So the next thing we're going to do is now we need to properly journalize every single transaction here, okay? So let's go ahead and again, how do we go ahead and do that? Well, let's go ahead. So we're going to go through every single table that is in my depreciation. So starting with our computer, right? So what is my journal that I need to do to calculate this? Now, if you remember, we have to use a contra account in order to adjust the depreciation because we can't directly take it off of the actual cost because that's the rule, right? That's the historical cost principle, right? We cannot change the value of our fixed assets, okay? When we purchase them, we keep it its value until we dispose the item, get rid of the item, or resell that item out. So in this case, it does not change its value, okay? So how do we represent that we actually use the items? Because in this case, right, that's the purpose of depreciation, right? Because if we buy an asset, right, and we use it, right, it's not going to hold its value because we use the items, right? So in this case, we must find some kind of way to give us our fair market value, or in this case, that's why we calculate book value, okay, in case we do end up reselling it. So we must use the accumulated depreciation, right? That is our contra account to help us calculate how much the total value of our assets are, okay? So in this case, contra account, very first one, is going to be for our computer. Accumulated depreciation for the computer is 1411, okay? 14011. So that's the very first thing I'm going to do here is type in accum depreciation, okay, for the computer. And that was 14011. And that cost me a total of $61.16. Okay. Next one I have to do is the accumulated depreciation for the printer. So again, right? So what you can do is you can copy all of these because at the end of the day, they're all going to have the same exact titles. Only difference is you will be needing to change what these items are. Okay. So let me see. I think that's good for now. Okay, so the printer, right? What is the accumulated depreciation? Accumulated depreciation for the printer is account number 14021. Register is 14051. Okay, so we're going to do the printer first for 14021. Okay. And that amount is for $12.63. Okay. For my register, right, I calculated a total of $21.65. So in this case, what I've done here is I copied all of those things because I don't want to type it out. And what I'm going to do is I'm going to modify it. Okay. So in this case, this is accumulated depreciation for the register. So again, another shortcut that you can use to save some time here. It was 14,051 for the grand total of $21.65. $21.65. Okay. So let's see what is next. Next we have is our coffee brewers. Okay. So that's what we're going to do. We're going to change this. Okay. For the accumulated depreciation brewers. Okay. And that's going to be account number 15010. 15010 for the grand total amount of $52.78. Wait, but we have two of them for a total of $96.20. Okay. Okay. Next one is going to be our grinder. Okay. So in this case, we need to make a change here for the grinder. Okay. Which is, let's see, account number 15020. Coffee grinder, right? We calculated that to be $69.09. Okay. Next on our list is going to be our refrigerator. So accumulated depreciation for the fridge is going to be account number. My refrigerator is account number 15031. 15031 for a grand total of $29.13. Okay. So let's see what's next on my list. I got my tables. Okay, so in this case, your accumulated depreciation for the tables. Okay. All right, let's go see what our account number is for that one. So accumulated depreciation for our tables is going to be account number 1311. And the next one is the counter, which is 1321. And the next one after that is the desk for 1331. And then 1341 for your shelves. Okay. So at least I'd be able to do that, right? 13031, 130. Oh, wait, hold on. Thirteen zero 11, 13,021, 13,031, 13,041. Okay. So again, tables is the first one. My tables is going to be for $78.63. Okay. And let's see what's next. My counter is going to be for $14.21. $14.21. Okay. And let's see, next is my desk set. My desk set is for $7.84. $7.84. $2,000.84. Okay. And let's see what's next. We got my shelves for $6.87. For $6.87. And the last depreciation I have on this list, because goodwill is amortization, which is a separate account. This one's going to be for $257.67. So again, accumulated depreciation for the truck is for $257.67. Okay. And let's see what account number that is. So accumulated depreciation for the truck is going to be 1711. 17011. Okay. You have all the notes that you have the need. So in this case, you can make a note saying depreciation expense for all fixed assets for June. Okay. And of course, what am I going to do to figure out my total depreciation expense? In this case, you're just going to go ahead and equal up the totals of all of the depreciation that you have calculated here. So starting from the computers all the way down to the actual truck itself, and you're going to get a grand total depreciation expense of $655.08. Okay, so now once again, I need to go to my journal and plug in all of my numbers. But in this case, let's go ahead and finish up the depreciation tables by adding that last account here for the amortization. Because again, right, it is similar to depreciation, except you're only going to be amortizing it instead, because it is an intangible asset. So in this case, amortization expense is $66,500. Right? We're just going to go ahead and finish this off so we can close out our depreciation table. So amortization expense, okay, for $66,500. Okay, and of course we have the accumulated amortization for goodwill. Okay, so again, let's see, accumulated amortization for goodwill is account number 19101. Accumulated amortization for goodwill, account number 19101. So let's go ahead and take a look for my goodwill. How much am I amortizing for? $11.67. Okay, and I can go ahead and make a note here that I am amortization for goodwill for June. In this case, you don't need to disclose any of the depreciation costing methods, right? Those are going to be, again, in your depreciation tables itself for a continuation for the next month. So again, all you have to really do is just understand that this is an adjustment entry and this is what we need to do, right? The definition of depreciation already says enough, right? You're losing the value of the assets, okay? So you don't need to put too much detail in regards to that. So there you go. So now let's go ahead and finalize our transactions by updating our ledger accounts. So in this case, right, we're done with our depreciation table, so let's go ahead and enter in all of our values in our ledger account, starting with the depreciation expense, right? Here, it's an operating expense, right? We already know that it's at the very bottom of the operating, so here's your depreciation expense. So again, you can put in here adjustment entry, okay, for all fixed assets for June. Okay, you can list out all your fixed assets, right? Furniture, equipment, office equipment, and vehicles. It doesn't really matter. That's your description. Okay, general journal, right? This was page 24, I believe, right? We started the new page, right? No, we are actually on the last page of 23, the bottom of page 23. So in this case, general journal page 23. And we depreciate it for a grand total amount of for a total of $655.08. Okay? And since we're already here, go ahead and just do the amortization. So it's already down here, so we can just go ahead and do that. So adjustment entry for amortization for goodwill. Okay. General journal, page 23. And we're depreciating it for $11.67. It's amortizing. Okay, $11.67. Okay, so we're done with our expenses. So now let's go ahead and fill out every single accumulated depreciation on this list. Okay, starting with the very first one, which is the accumulated depreciation for the computer. Okay, so let's see. We got the truck here. Okay. Okay, accumulated depreciation for the printer. Okay, so we're close. Here you go. Accumulated depreciation for the computer. Okay, today is the 30th, right? You could just write adjustment entry. Okay. It's the 23rd, and how much are we going to be depreciating the computer for? We calculated a total of $61.16. Okay, so that's a credit. So there you go. So credit balance of $61.16. Okay. Our printer, right? Accumulated depreciation for the printer is going to be for the $12.63. Okay. The accumulated depreciation for the register which is a credit for $21.65. Okay, remember it's a credit balance. Okay. Next one we have on the list is going to be our brewer's grinder and our refrigerator. So let's see. Here's my coffee brewer. Accumulated depreciation. It is up to you if you want to separate them. I'm just going to go ahead and just do for both coffee brewer. So brewer, okay, brew. Okay, so brewer number 1, right? How much did it cost me? Let's see. So our depreciation table says that my coffee brewer number 1 gave me a total of $52.78. $52.78. $52.78, and brewer number 2 gave me a total of $43.42. Okay, which gave me a total of $96.20 credit. Okay. Next we're going to do is our coffee grinder. Our coffee grinder, right? Accumulated depreciation for my coffee grinder. Okay, is going to give me a total of $69.09. Okay. And accumulated depreciation for refrigerator. Right, gave me a grand total of $29.13 credit. And then we move on to our tables. Okay, so here's our accumulated depreciation for our tables. Right, which gave us a credit for $78.63. And then our accumulated depreciation for the counter. Gave us a credit for $14.21. Okay. The desk set, okay, gave me an accumulated depreciation right, credit of $7.84. And then we have the accumulated depreciation for my display shelves. Which gave me a total credit of $6.87. Okay. And then last but not least, for the depreciation, we have an accumulated depreciation for the truck. So vehicles, truck, here's accumulated depreciation for the truck to be a total of $257.67. So 257.67 credit. Okay. And of course, we can't forget our accumulated amortization for goodwill. So at the very bottom here, accumulated amortization goodwill, right, which is an adjustment entry for a total of $11.67 credit. Okay. All right. Last thing that we have left on our adjustments is going to be to adjust the office supplies. $80 on hand. That means someone went to the cabinet and we figured out that we have $80 worth of office supplies left. So that means we must have, let's take a look at our office supplies on our ledger. How much do we actually have available for us to only have 80 left on hand? Okay, so let's see. Office supplies, right here, office supplies. We purchased originally a total of 150 units. So in this case, right, how by the end of June 30th, right, how much should we have used in order to get only $80 left on hand? Okay, in this case, let's see. If we subtract 70, we get $80 left on hand, right? 150, okay, which is 15, right? 7 plus 8 is 15. So in this case, there you go, right? We used $70 of office supplies in order to have 80 left on hand. So that's exactly what we're going to do. We're going to recognize that we used $70 worth of office supplies. So in this case, we're going to refer this to office supplies expense because that is going to be considered an adjustment entry, right? Because we used the office supplies, right? When we counted how much we have left, right? That means for the month of June, we used $70 worth of supplies. That means we have $80 left on hand. So we need to adjust our accounts accordingly so we know how much we have left to start for the new accounting period. So in this case, right, and where's it going to be taken out from? It's going to be taken directly out from our office supplies because we have to, right, reflect our books to see how much we actually have left on hand. So in this case, if I used $70, right, that's going to tell me that I have 80 left on hand. So in this case, I already entered it into my ledger. So let's see what my office supplies expense account is. Okay. So here is, it's going to be in alphabetical order. Okay. Here you go. Office supplies expense account number 6750. So account number 6750 for $70. Okay. And I'm also going to make a note here that I am, okay, to adjust office, okay, supplies, okay, actually to adjust the usage of office supplies, right? We used $70 worth of office supplies, so that's why we have 80 left on hand, right? So there you go. Now, again, I need to record this adjustment. We already did the credit already. So in this case, I need to put here adjustment. We're still on the 23rd. We're on the very bottom of page 23, and we used $70 worth of office supplies. Okay, and we already corrected we already added in the credit for this. So therefore, now we are completely done with our adjustments, and now I need to go ahead and block this off because then we need to complete our adjusted trial balance. Okay, so that is it for today. Okay, I'm going to go ahead and make this adjusted trial balance. Okay, right there. So save your work here. Okay, and that means when we're done with this, we're going to do the adjusted trial balance and then complete the rest of the steps to the accounting cycle. Okay, so other than that, that is it for today.